First, looking into education, specifically student loan and student loan forgiveness programs. Now, currently, America's student loan debt is sitting at approximately $1.8 trillion, and it doesn't seem like it's going down anytime soon. And while millions of borrowers continue to pay off their student loan debt, the majority of students and borrowers that are holding this amount of debt are those that have gotten their higher education when it comes to master's or PhD, but also that balance is still for those who dropped out of college that don't even have a degree, are still paying off their loans. Now, as the federal government remains one of the largest lenders of student loans, the debt itself remains enormous. Now, specifically breaking it down state by state, we have the top states holding the biggest balance, which is California, owing about $150 billion, the state of Texas, $137 billion, New York State, around $90 billion, and Illinois holding more than $63 billion. Now, at the same time, the delinquency rates with these states shift between 8 to 12%, meaning that certain individuals have failed to pay their balance or the minimum payments every month past the 90 grace period. And so as these delinquency rates skyrocket, Pacific Research Institute economist Wayne Weingarten told the Center Square that taxpayers continue to be on the hook. But specifically in California, we have some critics questioning the current administration and their decisions on student loans and student loan forgiveness. Peter Sado, who's the executive vice president for United Nurses Association of California, had this to say about the impacts on student loans from the federal government for nursing students.
Today, Americans carry nearly a $1.9 trillion in outstanding student loan debt. AB 2301 won't solve that problem on its own, but it is exactly the kind of practical solution that helps chip away at the problem. By giving more students the opportunity to earn a BSN at a public institution instead of taking a massive debt at a private one, AB 2301 begins to reverse the trend.
Now, the state of California is taking some steps to try and help these students as they decide whether they go to public or private schools. But at the end of the day, the Trump administration, as they continue to dismantle the Department of Education, has taken steps as what they deem a way to benefit borrowers and future students that are going to take out loans. Specifically implemented on July 1, they recently implemented a program that reduces the interest rates from 1%. Now, for federal loans, the interest rates land between 6 to 9%. It's kind of a fixed rate depending on the kind of loan that you get. But if you go to private lenders like Sallie Mae, College Avenue, SoFi, and other private banks, the interest rates can be as low as 2%, or depending on your credit score, skyrocket to 17.99%. And so the Trump administration has said that if borrowers enroll in automatic payments, in autopay, they can have their federal interest rates reduced by 1%. But that still doesn't make the discounts make an impact on borrowers when it comes to how much they still owe in student debt. The Committee for a Responsible Federal Budget estimates that taxpayers are still on the hook. If this 1% reduction in interest rates go through, it's going to be costing about $5 billion for taxpayers. And they argue that lowering the interest rates means that borrowers are ultimately still going to pay back less. And essentially, they say it's kind of like student debt forgiveness, which the Trump administration has been very vocal about being against, and they've rolled back a lot of what the Biden administration pulled out when it came to student loan forgiveness. And so a lot of critics say that these kinds of actions by the Trump administration are no better. They're kind of similar to student loan forgiveness. And so that conversation continues. But Andrew Gillen, who's a research fellow at the Washington, D.C. think tank, the Cato Institute, told the Center Square that America has more people with college degrees than jobs that require of them. So there's this question of, we're sitting with a very high number in student debt portfolio, but what exactly is that return on investment? While about 38% of Americans have graduated with a college degree or higher, master's degree, PhD, only 25 to 28%, as he says, of jobs actually require a degree. And so the question is, as the Department of Education continues to dismantle itself and the administration continues to implement various limits and restrictions on student loan forgiveness and different programs, what exactly is this going to do for future borrowers and current borrowers when it comes to taking out loans? Are they going to roll back being the biggest lender in the country, and will more students go to private lenders to get their student loans? More on this as you go to our website at the Center Square to look at more education stories and developing. This is The States.